Good morning all and welcome to this morning's video. So this morning I have the same two pairs on watch. Again, the market just consolidating, just moving sideways, just messing around again. So the same two pairs on watch. Just to say that I did place a trade yesterday on pound Swiss, and that was a loss. Okay, beautiful textbook entry, which I would take over and over again, and which has played out consistently for me during testing, but just hasn't played out in a live market environment for some considerable period of time. But I'll break that down for you now. So pound Swiss looking for the same thing, pretty much, not quite the same thing, but almost exactly the same thing that I was looking for yesterday. So we have the start of this structure, as I've mentioned. We have all of this consolidation here. The start of the structure is here. Okay, that range. This is a typically how pound Swiss moves. We have a move up and then these long sideways corrections. This is the start of the move, the attractive area of value, the more attractive area of value. We have the near misses to it. Okay, this is about as simple as it gets. We tap into that area. Okay, I said yesterday we had the ending structure. What I'm looking for today may be invalidated by the end of this video, or literally in a couple of minutes time, because we've got news coming out of the UK in a couple of minutes time. We have this ending structure there. We have the three drives, 1, 2, 3. We break out of that, break above that, the origin of the consolidation, catch people the wrong side of the market, and then plummet to the downside, which is what we typically see. Okay, so as we drill down, I'm going to break the trade down for you. Then we have the impulse correction, potential continuation to push lower. And if we measure that, that would take us down to here, okay, down to that low there, which, as I said yesterday, just so happens to be the retest at the back end of all of that. Okay, so that makes contextual sense as well. So then as we drill down, so I'm asking myself, am I well positioned for a move to the downside? Yes. If I was a seller, I'd likely be getting out of, if I was holding this for the long term, the bigger players will likely be getting out of their positions either here or down in that area. Okay. Just going to take that off the chart. So you can see the consolidation here. We have the 1, 2, 3. It doesn't really get much more textbook than this. Okay, we have a big move down. We don't really build much volume along the way, so it's no surprise to me that we start to build volume here. So we had the 1, 2. We have the middle section there, and we even have, we just drill down. Let's just take that off the chart a second. We even have a little 1, 2, 3. So we have the 1, 2, 3 middle section there, come down. Then we have the 1, 2, 3 last leg. I almost made a little bit of a mistake here, but I didn't in the end. I think that's one of the reasons, possibly because obviously my trade frequency is quite low. I almost made a mistake, and I almost got, or was about to get involved here after this rejection. But then I realized that I said to you yesterday, this is a 4-hour structure, because I can see it on the 4-hour chart. Okay, which means that I can drop to the 1-hour chart for an entry. That is my rule. However, one of the rules, and this is where having a higher trade frequency, I think, actually helps. Sometimes you forget the sequence that you're supposed to do things, and I almost forgot to wait for this 4-hour candle to close. Okay, so if it's a 4-hour structure, yes, you can drop down to the 1-hour chart, but you want to be waiting for a 4-hour candle to close in or around the area of value. Okay, at this point we hadn't had it, so I saw my mistake, and then I waited for this candle to close, which closed at 2 p.m. Okay, so when that closed, that gives me permission to drop down to the 1-hour chart for an entry. Okay, and then we had this entry here. Okay, so after the close of this candle, I set my entry. I actually placed a market order, but I placed it, a couple of pips below the close of this candle. You might be thinking, well, what have I done here? I've stop cropped. This is a stop crop. I cropped through the wick. Okay, and the reason I've done that is because we'd already broken above here. Okay, we've broken above there. We'd also, if I just stick this on here, we'd also retested the back end of that. Okay, so the chances are, if we've broken above all of this consolidation where there would have been a lot of stop losses and tapped into the back end of this, the retest, there's no need for price to go back up. And if it is going back up, then it's likely not what we think it is. Okay, so your stop loss should be relevant to your invalidation criteria. So it wouldn't have made any sense, or wouldn't have been any benefit rather, to have my stop loss up there, because price is already tapped above all of here, above all both of these highs, and tapped into this consolidation here. So if it doesn't commit after all that, then it's likely not what we think it is, and pushing up to these areas to find liquidity or doing something more complex. So I was tagged in literally to, to the tick, and then price just blasted in the other direction. Okay, and then so my stop loss was there. Okay, so I was literally tagged in by the tick, not to the pip, and then literally tagged out here. It must have been in that area there. Okay, so that is pound Swiss, and many people will think, what did I do wrong? If you took this, you didn't do anything wrong. That is literally a textbook trade. That's about as good as it gets, okay, in terms of how we trade. And when people think they did something wrong, it's what that tells me is that they don't understand probabilities. Okay, they think that if you have a trading strategy, which in testing at least gives you a profitable edge, they think that every trade must be a winner, and if it doesn't, then something's wrong. You did something wrong. You didn't do anything wrong. What you're not factoring in is that there's always unknown market variables at play in trading, okay? And by definition, they are unknown, okay? We don't know, as I said yesterday, many traders don't know what they're going to do until the moment that they actually do it, okay? So you're not thinking in probabilities. If you were thinking in probabilities, like as I do, I look at this and think, well, I know I've tested this. I've been testing this entry for 4 years, okay? And in testing, it plays out consistently. So I know I didn't do anything wrong. And over a large sample size of trades, this should produce profitable results, okay? And what also baffles a lot of people is that you could take this entry and you could test it for however long you want to test it. You could take 100 losses in a row in a live market environment trading this entry, and then people go, but what happened? It's like the market doesn't have to do anything. Okay, the market can give you 100 winners in a row, regardless of how much experience you have, or it can give you 100 losses in a row. Okay, you have to if you place a trade in trading, you have to accept the market can do anything at any time, regardless of how much testing you've done and regardless of how high quality the entry is. Okay, and if you can't accept that, then you shouldn't be trading. Okay, so that's that is pound Swiss. So what I'm going to be looking for now, okay, is, as I said, if it didn't commit from here, then it's likely not what we think it is. But it still hasn't moved too far from here. Okay, so there is still the possibility that this drops. Okay, so that's moved again. I don't know why that's happened. Okay, so what I'll be looking for is if price pushes down below this area of value, we get a 5-minute continuation or a 15-minute continuation, then I would look to get short on the break of the flag or within it. Okay, once I've taken a loss with a risk entry, my rules, so from the edge of structure, my rules are that I don't take another risk entry, so that you don't end up just being tagged in and tagged out repeatedly. That's what the amateurs are doing. In any case, we're trading above the area of value now, so I wouldn't take a risk entry from up here. Okay, I only take risk entries when we're actually below the structure. So that's what I'll be looking for there. And then same rules apply as yesterday. I would be able to manage this down to the low for something in the region of 4%. And then down to the first target there is where I'd set a take profit. Okay, and I would trail my stop loss accordingly. and I would measure the range. I'd set the take profit there, okay, and trail my stop loss accordingly. So the 90% area is where price can pull back deeply. As I said, this is why you can't rely on, trading is too unreliable to provide you with an income. Okay, you wouldn't be able to budget on your income from trading anyway, because you never know what the market is going to give you. But that's why any money you do make from trading, you need to invest it into other things which provide a more reliable source of income, and that's what that's my strategy. Okay, relying on trading to pay your bills is that's a very, very silly idea in my experience. But that is pound Swiss. That's the trade. Very happy with that. And now just looking for this entry. Do I think this is going to shape up? I personally don't think this is going to shape up, just because, as I said, if we've not committed after breaking above these two highs and retesting the back end of that, if that's not enough to send this to the downside, then this is probably forming something more complex. So I don't think this is likely to form, but just in case it does, I've got it on watch. Okay, so we shall see what happens, and I'll have an alert set just below that low to see if we push down, and if that doesn't trigger, then obviously this has not committed. So dollar Singapore, same thing I was looking for yesterday. So on the higher time frames, very, very simple. This one, we have this standout high on the daily chart. Okay, once again, the DXY looks like it's we'll get to that in a second, but we have this high here. You can see that we've now had a bullish high test, okay, but we wicked through the area of value, not to it, and there is a high here which is more visible on the 4-hour chart, admittedly, but we wicked through that as well and pushed to the downside. We then come up again, we've wicked through the area again, so we filled the bullish wick with another wick. That gives me a clue that this, even though it looks like a impulse correction continuation to push higher, this gives me a clue that this might just drop out, and then we could be targeting this low here, which this low near miss 2. We even have this kind of middle section there within all of this structure. Okay, now as we drill down, it does start to look like a impulse correction continuation to push higher, but this just looks like consolidation to me. If we just drill down to the 1-hour chart, this just looks like consolidation. Okay, this is getting wider and wider, and I can't, unlike pound Swiss where I was able to separate the structures, you can see the middle section there. We have that 1, 2, 3 structure there, even with a 1, 2, 3 last leg. Okay, with dollar Singapore, you can't really do that so much. You can kind of make sense of it here, but it's starting to look more like consolidation. I think you have to have been trading for a number of years to be able to actually see these things, but yes, it could be an impulse correction continuation to push higher, but it's really not looking like that to me. This is just bunched price action. Okay, I've just flipped that. Flip that upside down. Now the DXY looks like it's pushing higher, but it doesn't look like it's ready to. Okay, this to me looks more like we'll get something like this, where we end up with this kind of structural approach like that, and then move to the upside if that is going to happen. So that would mean that dollar Singapore wasn't ready to move to the upside if that was to occur. However, if the DXY just dropped out, so if the DXY just dropped out below here and started consolidating, which it could do to fill that gap, okay, and to take out the low here, which these lows near miss 2. So I'll be paying attention to the DXY on this for this dollar Singapore trade. Then this could just drop out, okay? And if this just dropped out below all of that consolidation, below all of this consolidation, and then corrected afterwards, then this is likely dropping out all the way to the downside. So if that was to occur, what I would be looking for would be a 2-touch 5-minute continuation, or a 2-touch 15-minute continuation with a 5-minute risk entry within the structure if I could get it, and then I would be able to manage it down to here. If we just measured the range, that would take us from there to there, and we have a sharp move sat just above the 90% area. So in this case, I would actually set the take profit there and not actually at the 90% area. And then we could be playing, this would likely follow through with the same level of aggression as we moved up to the left. So that's what I'm going to be looking for today, folks. I've just kept this a little bit shorter today. I'm running slightly later, but Hopefully you've enjoyed this video. So if you took that pound Swiss trade, if you're in the Falcon community, don't beat yourself up. That is a very low quality, excellent setup, which you should be taking over and over again. And don't beat yourself up because of unknown market variables, which you couldn't possibly know. Okay, so that is pound Swiss and dollar Singapore. Of course, if I get another entry on this, regardless of whether it's a win, break even, or loss, I will update you accordingly. These videos are about educating people and also transparency. I'm not one of these charlatans that you see on Instagram and YouTube that convinces you that they take 20 trades a day and they're all winners. That's not how trading works. You know, I am one of the top 5% of traders in the world, along with a lot of the members of the Falcon community. But every strategy produces a loss, okay? And that's something you have to get used to in trading. And if you can't, you're in for a bumpy ride, I can tell you that much. But have a great day, folks, and I will see you again in the next video.